The broadcast is now starting. All attendees are in listen-only mode.
Hello, Warriors. Face, how you doing? Glenn, how are you? Everyone doing okay? So last night S&Ps were higher. Good morning, Scott, and gave it all back. It's like the third Monday in a row that you woke up Monday morning with S&P sharply lower here. So was that it up there? Never quite got to the 61.8 level. The bear hat on me says that's it. We're going to wash out here to new lows. My intuition says it could hold this break and we could get one more run. Okay, so uh, I don't have the fibs measured for this. One of the reasons I think so, and I might be wrong about this as well, is that the yen is just pulling back to support, although the bears would say it was enough of a rally because it was 38.6, 38.2 here, right? But when I look at tenure, this is what, with the market sharply lower, you look at yields, and at least they were last time I looked, really not dropping much, you know, not dropping much. Okay, so it's the second high or low right here. And even though I think that this was not the bottom, maybe someone could show me how to change the hours there. It's a 2 hour I never use, but let's see. So on the yields, I still expect that 235 to be taken out. See, we almost got back down here, but I thought we might be able to rally back into the gap that we left. Here's a 2 hour chart. This big gap from the trade news. But I could be all wet, and the S&Ps could crash, and this could happen. And then, if that happens, crude may have done enough up here. It's hard to short the crude with all the news that we're getting, but we had the sharply higher opening that it faded from, and there was pretty good divergence. And what's this formation called? Face. What is it? Anyone know? Yeah. Ping pong. You just hit an ace. You just served for an ace, ping pong. Oh, pin bar from Oliver. Oliver, you know what a 3 drive is. Okay. Anyway, this could possibly be it. It almost got to the 61.8 level here in crude. So I guess the big question is it risk off all day into tomorrow, which is a possibility. I've noticed new positions that I put on Sunday night or Monday are tough. I think I'm better off waiting to fade things into Tuesday, Wednesday, Thursday. But we'll see. This could have been enough in crude. There's your 4 hour. It diverged on that too. The off numbers down here around 61.70 on the weekly. No sound. No sound. Can you guys hear me? That must
I can
be
I can hear you fine.
okay. It was Andre. Yeah, it's you, Andre. Okay. Thanks, Blake. So the off number, I think it's around 170 for a 2 week reversal. Just something I learned from Eric Haydick. See, I have no original ideas. I've learned what I do from others, just like you're doing. 61.71 is what crude has to close underneath for a 2 week reversal to the downside. That's very doable. It's right here. It's doable. Anyway, they shook out the people that traded this 2 drive, and crude lower, S&Ps are lower. Looking at copper, I actually tried to bottom pick it last night for something counter trend, and I was stopped out. I went with the opening here. I thought it was coming out of here, and now uh, I'd like to see what it looks like taking out this low. I can't chase copper after this big move to 290. I still think there's a chance for some kind of rebound in copper. to get short, and precious metals are trying to do something. You have a little 1-2, but they just got so decimated, they don't feel ready yet. Another ghost candle in silver. God, it happened all the way up last time. So the ghosts are coming in. You never even see a trade here on Sunday night. And then all of a sudden you just have this, as Oliver would say, a pin bar. I used to play pinball. That's how I got my earliest training in trading, was playing pinball and making graveyard saves, learning how to stick the ball on the flipper to hit my target or objective. And every once in a while, I'd hit the machine a little bit too hard and get stopped out, and I'd see tilt. So I was grooming myself for becoming a trader in junior high playing pinball machines. So you may want to consider doing that during your off your off time. Blake, are you a pinball wizard, or you too young to have enjoyed that part of
Oh
you
no,
know
no, no,
entertain
no,
you? No?
no, no. I enjoyed pinball.
Oh yeah, that's great, isn't it?
Yeah, pinball is pretty awesome. Yeah,
Y-
but I still dig it. I dig it over more you know
Than video games.
video games. Yeah, you know.
Yeah. We used to, because we didn't have a lot of money as kids, we would learn how to get it stuck in one of the payoff things and put it on ashtrays and rack up 25 games. And we also knew what the match numbers were on a few games. And on the last ball, we would just drop it and take the match. So we were market makers
Awesome.
on pinball. Anyway, buddies, what are you thinking coming in here today after
You know,
last night's strong opening and it's given everything back?
well, first of all, I think that this China news is going to have a negative effect on equities, and I think it's going to be I you know I'm a little skeptical about being a buyer of risk. Um,
Yeah. What was the news, Blake?
today. It's just the ban on these Chinese
Hogs?
Huawei products. So
Oh, okay.
yeah, so and that's obviously just souring a lot of the tech stocks, and so there's
Did
some
Europe
risk
go
aversion,
along
I
with
think.
that? They're still on the fence.
I don't think they went along with that. No.
Okay. All right.
So but still, it's just another
Yeah.
elevation of the actual trade war. So
Gotcha.
the yeah,
Chandler
there's
was sure right about a new Cold War with China when he was
yeah,
on several months ago.
yeah. I mean, this is obviously escalating, and if you're long risk, you got to be obviously a little careful here, and how long, I mean, you get into this pattern. It's like, okay, well, I start buying dips, I'm going to buy dips and risk, and I don't know if that's necessarily the case
Yeah.
today, if that's what you want to be doing. But I'll tell you, I came in short some dollar Swiss, so and did all right with it. I closed it out, unfortunately, about 10 pips ago.
There it is.
um
If you want
yeah,
to take
here
it over, yeah.
yeah, I was just going to take over the screens here.
Hey, buddy.
I was short some dollar Swiss coming into the weekend with this bear flag, but we're getting towards um, flag support. So I don't know how much I want to press at this point. But you're also seeing you're seeing the dollar actually weaken here, and you got the euro that's starting to firm up, and uh, we were I was just talking with the guys in the office, and we were discussing about how the dollar's not kind of acting right, and I don't know how much downside there is in the euro right at this moment in time. I mean, it's going to be an interesting dynamic if we see some risk aversion, yet the euro firm up. So we're going to have to watch this euro very carefully. I don't think I'd want to be on the short side down here. And I mean, we've seen a sell off in the euro towards the 78% retracement, but again, I'm a little skeptical about trying to be on the short side here. I'm actually just trying to figure out exactly what I want to do personally after being short some Swiss, dollar Swiss, that is, taking that off already. I was short the euro pound over the weekend and just took, where's my euro pound? Oh, it's down here. I took profits on the euro pound this morning when we were down at 54. And I want to be a seller of the euro pound again because I think this 50% retracement would stick, and it did. But I'm waiting for a break below 87.50 to cue in to be long some cable, or short some euro pound would be the way I'm going to express that, I think. And if you look at the 1 hour chart, it's this 50 period moving average, it's holding it up pretty well. Whoops, it looks like the dollar Swiss is trying to break further here. Let's go over to the Swissy. Yeah, we're really testing some pretty key support, and one of the things that is going to reignite my desire for shorting the dollar Swiss on rallies is seeing it break into new hourly lows. So that now, like, I'm looking at this chart and I'm like, okay, well, if we get down here towards, like, let's say 1.0080, then I know we're making new lower hourly lows. So that means any rally I'm going to be selling. So that's something I'm going to cue into today. But it is a pretty quiet market despite the risk off tone that we're seeing in the market. It's fairly quiet. The Aussie has a bit of a bid following the elections, and with the Aussie dollar, we were just talking about how aggressively the market has priced a lot of rate cuts, but it's fully priced in. And with RBA Governor Lowe, who's actually speaking tomorrow night, well, which would be Wednesday morning, unless he goes full on dovish, I don't know if I really want to be short the Aussie, which is interesting because when you have this risk off and you're not seeing the Aussie sell off, that's got to make anybody who's short a little skeptical in being too aggressive on the short side of the Aussie. So, looking at this Aussie dollar, what I'm probably going to be doing for today is I'm going to be looking for a dip in the Aussie, maybe down towards 60, 68, 80, somewhere down here, and then I'm going to be looking for long. So I'd like to see it pull back a little bit with some of this risk aversion that we're seeing. I'm hoping to get a dip to buy the Aussie, and this is going to be ahead of RBA Lowe speaking, and if he is not super dovish, I think that might give the Aussie another reason for short covering. So that's kind of what I'm looking at with the Aussie, and the Kiwi is a very similar situation. If you look at the New Zealand dollar, the New Zealand dollar bounced off 161% extension, as did the Aussie. So let's also keep in mind that the Aussie hit the 161% extension, gapped up following the election, and now dips are probably going to be bought here. Same with the Kiwi. I think the Kiwi is struggling a little bit more than the Aussie because of the risk off that we have, but I wouldn't mind actually trying to play the Kiwi on the long side, especially if we break this downtrend line here that you see there. So that's kind of what I'm thinking with these two particular pairs. And yeah, look at the euro. The euro has got a nice bid in it. So, and I'm looking at the chart here in the euro dollar, it's hard for me to really justify being long at this moment. I just don't think I'd want to be on the short side. Like, I don't have a clean setup with the euro. Like, there's nothing that is telling me, oh, I need to be long right at this moment in time. I don't see any trend lines, or maybe there's 127% extension of this move. Might be the case. Let's see here. Yeah, I mean, that was 127% extension of the last move, I guess, has supported it. But again, I'm just looking at it like, I don't know if I'm super comfortable being long down here. And that's, when as a trader, what I always look for is I'm always looking for, you know, confluences, reasons to be long, reasons to be short. And if I can't come up with them, there's nothing wrong with being in cash either. And that's the situation I'm sitting in right now. It's like, okay, how comfortable am I taking a position here in the market? If I'm not really comfortable in doing that, I'll keep myself sidelined. And that's kind of the situation I'm at right at this moment in time, is just kind of staying sidelined. Now, I wanted to see, is Stelios here this morning? I don't know if he's going to be back, if he's coming in today. I'm not sure.
He's
Stel-
morning, Blake.
is that Steve?
Yeah, that's me.
Yeah. Oh,
He's
hey,
on,
Steve.
he's on a boat actually, on a sailing boat.
Oh,
So
he's on a boat. God,
yeah, yeah,
nice to be on
cruising
a
through.
boat. I
Yeah,
want to be
yeah,
on a
yeah.
boat.
Ah, get your get
I'm
yourself a ticket
landlocked.
and
I'm
come.
landlocked. I can't get on a boat. The biggest boat I'm gonna get. I'm gonna get on a canal. Get on a canal. So, Steve, well, thanks for the information. I know you're coming in a few minutes, so just go ahead and I'll continue on from here.
Okay, mate.
I just wanted to see if he was around this morning. I wanted to ask him something about what's happening with the UK, because I actually missed a lot of the news that came out. Well, that I didn't get really caught up last night. Yesterday was, and if you guys heard in the week ahead video, yesterday was my youngest son's birthday, and it happened to be my neighbor's birthday as well. And it was like a birthday celebration pretty much from the beginning of my day, before, because my day started when everybody else was awake. I was filming the video while everybody else was asleep. It lasted all day yesterday, with family coming over and yada yada yada. So I didn't get to trade last night. I didn't get to sit down and get caught up on everything, because it was the last episode of Game of Thrones, which I'm not going to spoil for anybody. But because of that, I've didn't get to get caught up on every bit of news that came out uh, throughout the last 24 hours or so. But I look at the pound, and the pound, by the way, this is trying to break a very steep downtrend that we've been in for the last week. I mean, and if you take a look at the cable and the price action that we have, I mean, we closed the week last week at 132 at a near extreme, and then we spent the entire week last week, or actually the last 2 weeks, excuse me, really just giving back like 500 pips, and we're trying to stabilize here. But I'll be watching the cable really carefully, because if the pound gets back above, see this dotted line right here? That dotted line comes in at basically 127.70 or 126.70, excuse me, or no, 127.70. If we get back above that, which I'm actually going to put an alarm on that, because I really want to know if we get back above there, that's what's going to cause a bit of a short squeeze, in my opinion. And when I'm looking around for things to do, I try to find points where the market might get tripped up. So if for in this example, if you're looking at the cable and you're like, okay, there's been a really strong downtrend. There's probably been a lot of people shorting the cable, going into the last week and a half. Where are they going to put their stops? In my opinion, anybody who's short is going to put their stops right above this breakdown point, which is also, coincides with the bigger 618 retracement of this entire move. So if you have your stop right here and you're short, because you think about, okay, if I'm short, I don't want it getting above this price. Then that means if I'm looking for a counter trend trade and I'm looking to play that squeeze, that means that if we get back above this level, that's where, it may not, you may not make, it may not be like a 400 pip move. All I'd be expecting is maybe a move from this 127.70 back up to 128.50, 60. And if I can squeeze 60, 70, 80 pips out of this move, I'll be pretty happy about that. So that's kind of on my radar at the moment. If we can get something developing, especially with some sort of dollar weakness that comes through the market. So anyway, that's kind of what I'm looking at there. Now, let's go back and talk about the Aussie, because this is one of those situations. If you're short Aussie dollars, especially going into last week, and you're finding yourself a little wrong-footed because of the election over the weekend. We went out, we closed out the week on a very weak note as far as Aussie price action goes, and now we're up in your face. This is one of those currencies as well that I don't know if we're going to get that dip that I'm looking for, that dip down, to 68.85 that we were just talking about. If this Aussie continues to hold up well as equities have pulled back, if equities do bounce from current levels, the Aussie might be, liable for more of a squeeze. I'm not long Aussie dollars. I'm just thinking from a, tactical standpoint. What point am I going to go? Okay, it's time to try to play this thing for a squeeze. And I think for us, we'll probably have to look right here, right at all this like horizontal resistance right here. Matter of fact, what I'm going to do really quick, let me get rid of some of these fib levels just to take away some of the, get rid of that. There we go. And let me grab my fibs, and I'm going to take this this last move down from this triangle here. And yeah, that is important, because what you'll notice here, let me change this. This is a 38% retracement of this downtrend, right? Of that you see how we made a higher high, equal low. So that we'll take that high. That's a 38% retracement. Okay. So that's what stopped us. So that means that if we get back above 69.35, that should turn into a bit of a short squeeze. So I am right now looking for a dip, but if I don't get it and we don't get that dip, the question is, if you were short, where are you going to place your stops? My opinion is, if you're short, you're probably thinking, okay, I sustained that bounce. It's a 38% retracement. It is horizontal resistance. If we get above that, I don't want to be short anymore. So this is the level where the squeeze higher probably intensifies. Now, does that mean we're going to break above that today? No, not. I'm not sure if that's going to happen, but it could. And if it does, I think we have to actively pay attention to it. So what I'm going to do is I'm going to put in an alarm right here, just to be notified in the event that we break above that. I'm going to be probably sitting around and waiting for things to happen today. And when I do that, what I tend to do is I tend to set up alarms all over the place, waiting for levels to be hit. Like in this example, I'll just be waiting all day for the Aussie to break above this resistance, or a dip down to this 68.85 and look for longs down there. So Steve is here. Stelios is obviously on a boat. So Steve, good morning. How are you?
It's one of these weeks that you start a week of tired.
That was my day this morning. I got up and yeah, it's Monday, and you're like, man, I can't believe I got to start my week on this foot. So, so as we're coming into the week, what are your feelings regarding like this China situation? We've got stocks are down. We've got the China-U.S. trade war intensifying a bit. How do you feel about the current environment we're in?
I don't see any basis for optimism having to do with, some kind of a resolution, at least from the side of China. I don't see any real willingness for the time being to play ball. Now, considering all that, I would have to say that risk is holding up okay, but I don't know for how long unless we get some positive news.
Yeah, and this week is pretty light for
It
US
is. It is.
data. We've got some, we got some data towards the end of the week, but it's going to be a pretty light news stream. So I think we're going to have to, I guess we're going to have to be watching equities. And I'm not going to go into those charts. I'm going to let you go into those charts
By the
because
way, let's not forget to mention, Blake, we had actually quite a good GDP print from Japan yesterday
yeah,
night.
and a lot of people wonder, is that maybe the reason why the yen is so strong is because of um, well above expectations GDP print. But the fact of the matter is the yen is a proxy for risk
Yeah,
aversion.
that's what I want to say. Usually, not usually, the yen responds positively to good news from Japan, as you know very well. I know it sounds counterintuitive, but that's not usually how it works, as you were
No,
saying.
I've always known, since I've been trading FX, I've actually very rarely, I mean, when I say rarely, I'm probably say 5% of the time, maybe less than that. Japanese economic data it just doesn't move the yen. What moves the
Yeah,
yen is
that's very true.
risk aversion or risk appetite. It has nothing to do with economic data. Will there be a time where the yen is responsive to economic data? I'm sure there will be. I just, I haven't seen it in the, 15
Yeah,
years I've been
no reason to believe
specifically
that that's
FX
going to
trading.
change. Yeah, no
Yeah.
reason to believe that's going to change imminently, right?
Right, exactly. So, I think the yen continues to be a byproduct of what's happening with yields or with risk on or risk off versus economic data. But it is worth noting that that the Japanese economy did
Yeah, we
uptick.
expected actually a negative print, and we got a positive one, and
Yeah. So
quite a strong one for Japanese day, standards
yeah,
anyhow.
and
Yeah.
it was, and and I think, but I do think that looking at the yen, and this is how I view the yen, and it's very similar to the U.S. dollar, Swiss franc, is that we do have this like bear flag forming.
No, I
But
agree with you.
yeah, so we've got this bear flag forming, and that's why I was very skeptical um, doing the analysis going into the end of last week with the dollar yen. Let's not try to get sucked into the fact that this was a false breakdown, that this was maybe just a consolidation and a bear flag consolidation. And that's what we're seeing right now.
Even
And
if you have a look at the daily, the fact that we gapped a little bit higher, and now we're much lower. We already have a dark cloud cover in place, and if we close a little bit lower, we might even have a bearish engulfing. So, if we do close weak on the day in the USD yen, that's also going to be quite a big reversal signal from candlesticks. So
yeah,
yeah, definitely worth noticing.
well, so I'm gonna go ahead and pass over the charts to you here in just a second. But before I do that, I wanted to ask: are we ready to talk about what's happening with uh, 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 in respect of what's happening with Paul Franco going forward? Are we ready to talk about that?
Yeah, absolutely. Absolutely, we should, because yeah, Paul is going to be starting tonight. Actually, yes.
Okay,
So that,
so
yeah,
yeah, so
go ahead
let's
and announce it.
let's talk about that for a second. So for those of you that don't know, Paul Franco is SPZ trader. He does our um, European crossover webinar, which it's great for a lot of Europeans. It's tough. Like, I can't listen to it live because it's while I'm sleeping, and a lot of people in North America are as well. But Paul Franco is going to be doing a daily webinar Monday through Thursday,
I just
wrapping up.
sent you the banner, by the way, if you want to show it
Okay,
on
wrapping up
Skype.
the North American session. Well, I would have to go and grab it this way, Steve. Uh, Hold on. Here we go. All right, so this way you guys can see it. This is his daily roundup today. It's starting. Actually, we have to change this. Um, This is not going to be
Yeah,
Monday
you're
through
right.
Friday.
It's Monday
It'll
to
be Monday
Thursday.
through
Yeah, we're gonna
Thursday.
fix
It'll be
it.
Monday through Thursday. But at 2 p.m. Eastern, every day, Paul Franco is going to host a quick 15 to 20-minute webinar. Sometimes it'll be a little bit more, but probably it'll be more like a 15-minute webinar. It's going to be rounding up what has happened up until that point from the morning, and then also what to be looking for into Asian trade. So it's going to be a really neat webinar. I think it's going to be great for a lot of you guys that are looking for a prep going into Asian trade specifically. Now, he is going to be doing something different because he's not going to be using our normal webinar services that we use at this point in time with GoToWebinar. So how do people register for this new upcoming webinar, Steve?
We're gonna give through our Twitter account a link within the next like hour or
Okay.
two. We're finalize some little details, and yes, we will be using the Zoom platform. We're sifting, there slowly. I mean, we already started the European crossover webinar there today. So we're going to be using Zoom, and just one more thing to note here. The time is not exactly fixed because it will also depend on market conditions. So, for example, if the market is quiet, it will be more or less at that time. Now, if the market for some reason it remains volatile near the end of the US session, it might be later than that. It might be closer to the US session. But people that register will be notified whenever the
Whenever
webinar
it's
is going
starting.
live. Yeah,
Yeah.
and of course, as always, we will be posting the recording, immediately after for people that might have missed it or whatever.
Yeah, and that's a good thing too, is we're going to be posting it relatively quickly once it's been aired. So it's not going to take, several hours for us to process that video and put it back up on, YouTube or on our actual website. This will be a faster process video that will be out. So if you miss it, you can get caught up quickly. Now, a question Joe just asked: is it for clients only?
No, not initially.
Okay,
So
so
everybody will be able to access it.
there you go, and that's the answer. That's a great question. So for those of you that have not, that haven't heard Polly on a continuous basis on the European crossover, you'll be able to hear him every evening, or at least Monday through Thursday. And those evenings, getting you prepared for the Asian session, kind of wrapping up what has happened in North America. So it's exciting stuff. It
Yeah,
is our continued commitment
we
to
wanted,
you
yeah,
clients
to
to
satisfy.
to have more exposure to us and be able to have more coverage. Ultimate goal of ForexAnalytix is to make sure we have coverage 24 hours a day, 5 days a week, continuously. So we're just kind of working towards that. So hopefully you guys enjoy
Yeah.
the new
It
service
was
that's
it
being
was
offered to
one
you
of the
guys.
popular requests actually on Intercom. People asking, if we can have some kind of way to wrap the day up. By day, they mostly mean like the end of the US session. So I think there's no better way than this one.
Yeah. And Steve, I
there's
just
no
passed
better
your
guy to
card.
do it. No better
Yeah.
guy to do it either.
Yeah, I agree with that, Coach. All right, guys and gals,
Thank
enjoy
you, Blake.
today. Thank you.
Good
I'll see
hunting,
you guys.
Blake.
Thanks. I'll see most of you in the chat rooms here this morning, and have a great remainder of your session, Coach. Have a great interview today.
Oh, thank you, Blake. It will be.
All
Thank you,
right,
Blake.
thanks, guys.
Yeah.
Have a nice day, mate. Hey, Coach.
Hey, Steve, I have a yen joke if you want to hear it, or you can
Oh,
go right.
go ahead.
Okay. So, Japanese businessman goes to his New York banker and he brings, a million yen, $1 million worth of yen. And the banker gives him like 900 G's. And Japanese guy is puzzled. He goes, well, foreign exchange, it's volatile, it fluctuates. And so he came back again and got even less on the conversion. And the Japanese guy's going, what is going on here? Banker goes, well, there's a lot of market fluctuations and it's volatile. And he came back one more time and got even less. And the Japanese guy said, don't tell me I'm fluctuated again. You like it?
I don't know. I don't know if it's
Oh,
rated.
oh yeah, it's rated. It's rated. Oh, have your children that are trading FX step away from the screen. We're all adults here. Anyway, all right,
Very true.
all
You
right.
know
So
that I'm not shocked, actually, not at all. I mean,
you're what? You're
I'm not
blushing.
shocked at all. I'm not
Okay.
politically correct in these
All
things.
right.
Actually, I'm the exact opposite. It was good.
Oh, I lost
Uh,
all my Japanese listeners. I don't
yeah,
think
that's
I
what I
have
want to
any.
say. Ziggy said, "Lol, you now just lost
Yeah.
all your Japanese listeners."
Oh well, forgive me. Forgive me. It's just a joke.
So,
Anyway,
coach,
it's my only joke.
anything you want me to have a look at before we start?
You know, what do you think about the action in copper? I've been negative, but I'm not sure we're going to just melt down in S&Ps to new lows, and we're pressing the lows in copper.
I'm not very optimistic about copper because it's pressing
Yeah,
this horizontal support
I
area
didn't think
once
you would be.
again.
Yeah,
And if this gives this
yeah. All
271
right.
to 72 area, I
Yeah,
think
55. Yeah,
it's a good bet that we're going down to 256, 257 again.
yeah. And if we take
And
that out,
price
Steve, it's like
action, price
220.
action seems weak. Price
Yeah,
action really seems weak for the time being. Yeah,
yeah.
yeah,
Well, I was bearish
absolutely.
higher. I just kind of thought there might be some kind of like maybe that was the last chance at bounce, and you
Listen,
called it back to
one thing is for
285.
sure.
Huh?
One thing is for sure. Blake was just looking at the possibility of a rebound for Aussie. Okay,
Okay.
I can add to that the Kiwi
Yeah.
is in a possible descending wedge. Now, let me clarify.
Oh, it's a 3 drive, man.
Yeah, let me clarify.
Nice. Yeah.
I'm personally not looking to buy them because I still have no evidence. So in my eyes, there is still no evidence that there is an imminent bounce. But Blake is like how's it called? Like the hunter's dog.
Oh, he's
he
got his intuition
yeah,
on turns.
yeah. He usually can
Yeah.
smell like stuff coming. He has like
Yeah.
sixth sense or whatever. So I'm not saying it's out of the question. I'm saying that so far we have price
Right.
action being bearish on Aussie, on Kiwi. Now this fits well with the copper as well because we know that they're decently
Good
correlated with
point.
each other. So if we do get that bounce in Aussie, if we do see Kiwi breaking above this,
Would you go with it
then
if it took out the wedge line?
I like the Kiwi price action more. I have to
Yeah.
admit. I mean, because it's a more clean pattern. You know what I mean?
Right. Yeah.
So I'd probably go with the Kiwi, although from a technical perspective, it doesn't make that much of a sense by having a look at the Aussie Kiwi because Aussie Kiwi held this 1053 support area once again. It actually with the gap higher that we had in the Aussie, we also got a gap higher here in the Aussie Kiwi. So
Yeah.
Aussie Kiwi, as long as it's holding that support, still looks rather constructive. You want to view this as a rectangle. Alternatively, somebody can see this as if you ignore that week like as a pennant, you see like this.
Yeah.
So it still looks like we might have more upside in the OZQ, in which case we might see a bigger rebound from the Aussie than the Kiwi. Now, having said that, both of them have broken down
Yeah.
in a bearish manner from formations. This is a symmetrical triangle. Kiwi had a wedge. Both of them are continuing lower. So far, price action remains bearish. Obviously, if we get some kind of positive news about, potentially like, an upcoming deal, of course, we've gotten, in the recent past, a lot of false starts with rumors or whatever. That is definitely going to help those assets overperform. Now, by the way, as we speak, the S&P, and I wanted to show that, coach, the S&P remains under pressure, and you can actually even see this
Yeah.
as a potential like pennant, and likely another move lower might come from here. So I would be quite careful here with risk. If you have a look at the S&P that we just saw.
Yeah.
If you look
Nasdaq's
at
worse. Yeah.
if you look at the Nasdaq, which seems to already be breaking down, if you want to go even on a daily chart, you can see that, especially with the price action. By the way, this is before I go to the Nikkei and the rest of the indices. This is the daily candle I was talking about. So if we zoom in, you can see it. We gapped a little bit higher. We now have a dark cloud cover on the daily chart. At the same time, this is very likely a bear flag. This might even end up being like a bearish engulfing if we close below 109.80. That's also going to be a bearish engulfing on the daily chart. Keep in mind that for engulfing candles, you only care about the previous candle's body, not the wick. Okay, just saying that because it's a usual misconception. People think that you need to engulf the whole candle. No, actually, it's just the body that you care about, the body of the candle,
Did you
not the
read
whole.
Neeson to learn candlesticks, Steve? I mean, for
Oh
people
yeah,
out there that want to learn candlestick, is
yeah,
that where
yeah.
they should start?
Yeah, absolutely. I mean, it's the benchmark book for it, right? For candlestick
Okay.
formations, absolutely.
All right.
So now looking at this, now going to the Nikkei, which of course is very highly correlated, going to the Nikkei, you can see some type of an equivalent price action, but keep in mind that the Nikkei had already made a bearish move here by breaking below this ascending channel. Now, this 21,000 area in the Nikkei is quite an important one. So let's see what happens from there.
Steve,
Fuji,
regarding
yeah,
the Nikkei, I've seen a lot of guys making the case that Nikkei can take out the December January low because of the structure, while the S&Ps could put in a higher low above the December January low. So, like the
okay.
Nikkei is more vulnerable for new lows than the U.S. markets.
Just by looking at the Nikkei, that's absolutely the case. I mean, you can clearly see the huge divergence of how this has been moving in comparison to the US indices, right?
Yeah, we made new
Have,
high. Yeah,
having said that, keep in mind, which, this is a big technical event, that for the Nikkei to take out these lows, most
yen will.
probably, we will need to see a move lower for the USD yen, a big enough move that would take out this long-term symmetrical triangle support. And that's going to be like a huge, huge technical event.
And
Okay.
further
We,
upside for bonds in that scenario.
Oh yeah. The,
Yeah.
the technical implications of, I mean, I'm not the only one looking at this chart and seeing a huge symmetrical triangle, right? I mean, the implications, the market implications, if we actually break below this triangle support, which is even above 108 actually now, because obviously it's an ascending trend line support, which means that every day it moves a little bit higher. Especially by confirming by breaking below 108, which is also like a horizontal support area. That's going to be probably the harbinger of a lot of bearish price action. So let's see what happens from there. USD yen looks very likely that it's going to break lower from this potentially bear flag, but is that going to be enough to break below this symmetrical triangle support? It's not easy to predict something like that because it's going to be a big move.
You know what? I'm kind of impressed how the yen is holding up with the S&Ps under pressure here today. That there might be more upside. I mean, we got to 38% back at today's highs in the yen. Maybe it goes 50% or 61.8 back from that high. U.S. dollar yen, I'm talking about.
If we break that bear flag to the downside, there's no
Oh
more
yeah,
rebound coming.
right. But I'm
Because
just saying today.
everybody's going to be jumping in. Yeah. It
Why
might
isn't
be
it
the
down
case.
40 today with what's happening in S&Ps?
Yeah, but something. Sometimes the price action lags.
Yeah, I know.
For reasons that we can be
Only when I'm
certain about.
short
Now,
or
now
long.
you were talking about now you were talking about the bonds. Keep in mind that for example, the 10-year treasuries are actually retesting this previous high. Okay, so I mean, we're still very well bid. There's no question about it, and we are actually threatening the December 2017 the levels that we haven't seen since December 2017 if we actually break this previous high, which it is very, very likely because we remain very well bid. We were expecting a bounce from here and to push the new highs. We haven't seen the new highs yet, but it doesn't seem to be far away. At the same time, the bund has broken above a rectangle, and just keeping in mind that this rectangle was developed after breaking above a multi-year corrective formation, there is no reason why not to expect higher highs from here. Keep in mind that the all-time high for the bunds is not far away. I mean, it's we're at 166.88, and the all-time high is at, what is this, 168.44. So yeah, bunds remain very well bid, and so far we have no signs that they're about to reverse. And I think we need to respect that. And oppositely, of course, 10-year treasury yields below 240 at the moment. Next area of support is at 228. And, we are, keep in mind that a lot of people were expecting that this breakout would lead to an acceleration higher in yields. But actually, from the high that we saw in November, we are currently roughly 1% lower, which is like a huge, huge move. Okay, the market was expecting the exact opposite, but that's what we got. And usually, as you know better than most, coach, uh, who do you trust more? What bonds are telling you, or what stocks are telling you, right? So this is something to ponder. Um, Deutsche Bank broke to new lows today. Can this turn to be a headache for the? I think that it's a constant, James. The Deutsche Bank situation is a constant headache for the ECB, and not only for the ECB, for the global financial system. And yes, you're right, Deutsche Bank. Let's open it. It has. I've kept saying that again and again. I mean, the technical picture of Deutsche Bank is just a disaster. I mean, just look at this chart. It's unbelievable. Just look at here. May 2007, Deutsche Bank was trading at 140. And from then to now, which is like literally 12 years later, it's been one-way rodeo, right? And because clearly, even this rebound that we got from 2009 to within 2009, actually, from the beginning of 2009 to October 2009, in comparison to this one, can just be considered like a bear market rally. And after that, we've only had periods of consolidation, then a resumption of the downtrend, periods of consolidation, a resumption of the downtrend, another period of consolidation, etc., etc., etc. And recently, rather recently, I was expecting a breakdown from that. Then it happened. Then we saw this rectangle, and I said, you have no reason not to expect that this rectangle is also not going to be resolved to the downside. And that seems to be the case. I mean, this rectangle is probably going to get resolved to the downside. Probably it's what's happening now. So yeah, more downside coming. And I mean, we're currently trading at 750, from 140 to 750. Just imagine that. Okay. So yeah, it's a disaster ready to happen. And now, will they let Deutsche Bank fail? No, they won't. No matter what, they won't. Uh, but will people that are involved with the stock lose even more money? Most likely, yes. Right. I think it's impossible that they're going to let depositors lose their money or whatever. But there's more pain to come, in my opinion, for the stock. And yes, it is a big problem. Bank of America 2.0, says Scott. Yep. By the way, let me go back to the questions because I started from the end just because I saw an interesting question. Would you be careful if S&B gets involved in CHF? You're even giving me a link. Let's have a look at it. Let me open this link. S&B's Moses Central Bank will intervene if we consider it to be appropriate. Yeah, a statement. I don't think, personally, I don't care what he says. I don't really think that the S&P has ever been out of the market. Yes, there are periods that they intervene a lot less or almost never. There are periods that they intervene more clearly, more openly. Okay, but I do think that they're monitoring the market closely, and perhaps they even intervene on occasion less than they used to. But yes, now the fact that he made that statement tells me, because you know how it is. I mean, they discuss things among each other, also based on data that they don't want to publicize. And then after having a big discussion, they might make a short statement like that one. So, what that statement tells me is that they're afraid that there is an elevated risk that we are going to see the Swissy getting more bid. Okay. And obviously, they've already discussed what they're going to be doing with that. Now, having said that, the situation against the euro, which is what they monitor mostly, is very much contained. We remain trapped in a range since August 2018. So it's been a very, very boring trade for like 9 months. We've been we've spent in essence the last 9 months trading between 114.30 and 111.70. So far, the situation with the Swiss is very, very, very contained. And I do think that you have no reason why you shouldn't be trading the range if that's what you like to do. I even was saying so as we were appreciating that, if you want to trade in the range, just, sell every rally that, brings us close to this 114.30, 114.50 area, buy any move towards 111.70 until we see a breakout. Because once you see a breakout, I think that we're definitely going to see an extension. If it is to the downside, it's going to be towards 110. If it is to the upside, it's going to be again towards 117. Other than that, I don't think there's much to do. But speaking about the Swissy, let me also say that we have this interesting formation here in the USD Swiss, which can easily be resolved one way or another. Okay, we have this wedge. That's not necessarily a bearish wedge. Okay, it can also be resolved to the upside. But I do think that it's going to be quite an interesting technical event when we see a breakdown or a break higher from this, because we should see an acceleration one way or the other. Does the newly elected government in Aussie have control over monetary policy? Not directly. Jeff, I really love your question. Or is the RBA independent like here? Why? Is the Fed independent? I think that probably the RBA is more independent than the Fed, if you want my question. Are they theoretically speaking independent? Yes, they are absolutely independent. Are they practically speaking independent? No, they're not. They're absolutely not. I mean, we've seen that very clearly exposed a few months ago with the huge U-turn we saw from the Fed just after the pressure Trump uh, exerted on them. And, we know that the Fed is not independent. They try to act as they're independent, but they're not. And that's the same situation with the vast majority of the central banks. Some of them are more independent than others. That's true. But, none of them is completely isolated to, the politicians in charge, to what the government wishes, etc. Markets counting that UK most likely referendum is going to be May deal or no deal as opposed to in out. So the best risk reward may be a surprise in move, says Nick. Yeah, I the whole situation with Brexit is really getting me disgusted. I mean, I think there's a lot more drama to be played. That's one thing. And I think that depending on some randomness as well, it can go either way. I do think though that the more this situation gets prolonged, any type of a resolution that is going to be one way or another, like the UK staying in the European Union, I think the chances decrease substantially. For example, the polls show that the Brexit party is going to be probably the first party in the European elections. And just imagine how that feels having, representatives that actually, in the European Commission, in the European Union in general, that actually just, want their country to live. So I think that one way or another, this ship has already sailed. Okay, but that's my personal opinion. We're going to see how that's going to work out. The question: who is dependent, banksters or government? Yeah. Okay. Now, having said that, let's have a look at. Oh, by the way, I wanted to say that the move higher with the euro pound is really, really, really impressive, right? Really impressive. I mean, just look at this. It was like 10 consecutive up days, 10 consecutive up days. In essence, we ended up building a base around here at 85 cents. And this move higher has been brutal. If you have a look at it on a 4-hour chart, let me show you. It even channels very nicely. So, I have to say that it looks like, buying the dip is the way to go from this point on. Here,
88 is, Steve, I have a weekly moving average. I think the 200 week comes in at 88.
Yeah, it
There
does.
it is.
Also,
Yeah, there it is.
also, we have a confluence. We have actually uh, uh, cluster. Yeah, that's the word I was looking for. We have a cluster of resistances roughly at the same area, which is 50% fib of this move lower comes at 87.82. The
Okay.
200 daily moving average comes at 87.90. Now, if you go down to the 4-hour chart and you see you fib extend this last leg lower, the 161.8% extension comes also, as you see, at 88 cents. So yes, there is a cluster of resistances, all of them around 88 cents. And given the very, very strong rebound we've seen, it is very likely that this is going to be a nice area for the market to, produce some type of a pullback.
I
But
think that 86.50 level was so important, Steve. You and I have been talking about it for, I don't know, about 10 years now, that it may come back and revisit that breakout.
yeah,
It's,
it is very likely. Actually, 27.30 and 26.80
yeah,
are two levels I would be watching closely in
yeah,
the case of a pullback,
yeah,
as good areas for more buying interest
yeah.
to emerge. So
Because
yes, I would
because we
definitely.
could go to 91 on the next move if you go out to a weekly. There's a high up there at 91. I've been waiting for this for a long time. It's happening. So after we get through 88, I think we could challenge those 91 highs up there, and then
Listen, one thing is for sure: this price action.
impulsive.
No, I mean the one lower here.
Oh,
All this move you see. I mean,
yeah,
all this price action that we had since
yeah. Since fade
September
started.
2017. Yeah, from September 2017 until recently. I mean, it didn't look. It didn't look really bearish, right? I mean, we were moving lower, but in a very, very, very slow and overlapping manner. And that's not what you want to see if you're really bearish the euro pound, right?
There's still probably
Uh,
people stuck because most were on that 86.5 breakdown.
Definitely. And, it's very clear to me, on the chart, at least, looking at a little bit longer term, um, I would not be looking for areas to sell. I would be looking for areas to buy if I want to be involved with it.
Great review, bro.
So if your guest is here, Coach, I
Yeah.
mean, be my guest.
He is, and in fact, it's kind of reminds me of the Beatles' Magical Mystery Tour, as Mystery Trader 99 joins us today. So everyone put on their anonymous mask for the interview. Great to have you here. So I have two. I'm going to go with this one. It's at Mystery Trader 99, and making you the presenter now, my friend. And stick around for this presentation by Mystery. He's going to talk about things very telescopic on fiat, and we'll also cover crypto. And it's going to run a little longer, but he's worked very hard on this presentation. And thank you so much, Mystery, for dropping into face and sharing your work with us today.
Dale, it's a pleasure to be with you today.
And I have to start here. Why Mystery Trader 99? Are you the Julian Assange of the trading world?
I wouldn't go that far. No, definitely not.
Okay. Because he's
actually,
in chains right now, buddy. So you don't want to model your career after him.
no,
Right?
clearly not. Clearly not. It's actually a really funny story. So for those that don't follow me on Twitter, obviously I'm more of a private guy. I like to kind of be low key. I'm not really much of a social media guy, and I wasn't for the longest time. And I had been, I guess, passively following Twitter manually. Like I'd have my internet browser and I'd manually bookmark people's pages and I would follow it manually, but I never wanted to join any social media platform. So it's actually a true story. No one knows this. I've never told it before, but I wanted to join because I wanted to get 5 or 6 people's attention so I could kind of pick their brain and, about trades and whatnot. One of them is actually our guest, Henrik. You know him well.
Okay.
But on Twitter, you can't actually contact anyone directly via direct message unless they follow you. So I had to come up with a creative way to get these people's attention. So the only reason I opened the account was to start posting a couple of charts, was just to get their attention so I could talk to them. Well, one thing led to another, and I guess my charts kind of took off. And next thing I know, there's 10,000 followers when I only expected about 200. So I guess it's one of those. Thank you. I never my intention. I was never trying to be actively involved. The real reason I wanted to remain private was after following Twitter for quite some time. Obviously, there's some very valuable information on Twitter, but also there's a lot of kind of riffraff, once you've been following it long enough. And I notice a lot of people tend to make the account about themselves or their ego or, brand recognition. And I never wanted that. I just wanted to put out good quality data, completely anonymously, just to see how it was perceived. And I just wanted to focus on the data and the charts. It's not about me. It's about the content and helping people with their charting, with technical analysis. And that's kind of been my focus more from an educational standpoint.
Okay, noble goal. And thanks for coming out of the closet, even though you're still anonymous.
Yeah.
So, all right. So you gave me a little bit of a heads up of what you wanted to talk about today. And
Sure.
you have a thesis that I only heard once before. And I really didn't understand it. And when you hear,
can you see my screen right now? No.
When you hear it was some guy who had an AI system that was talking about the same thing. But I mean, like Solomon says, there's nothing new under the sun. But when I hear someone like you say something that I remember hearing a few years ago, it's kind of like having confluence of this idea isn't just a one-off. It's in the consciousness of bankers and traders, and of course AI. Does AI have consciousness? Anyway, so I'm really looking forward to your rationale for all of this.
Sure.
So I'm not going to interrupt you. I'm going to let you go. So
fair enough. Can you see my screen right now?
Yeah, we have it.
Cool, perfect. Okay, so here's basically a breakdown of kind of some of the topics I wanted to talk about today. Before we get started, full caveat, what I discussed today, I don't have any personal political biases, or we're not going to discuss the moral or ethical ramifications of what we're going to talk about today. Today, we're purely talking about where is the global currency market, global financial markets, and how can we trade from it? That's ultimately the goal as traders. We're not here to pass moral judgment or get into some kind of, get in the weeds of a political debate, because that could go on forever. Really, we want to focus about the numbers, the mathematics. What is the data telling us? And essentially, having looked at the data for quite some time now, I begin to notice some major global macro trends. And the more I looked, the more I started to realize I believe my hypothesis is there is going to be a global monetary reset at some point in the next 6 years, and I'll give you the exact dates. But before we get into that, the reason what led me to believe this was I began to see a lot of confluence, as you mentioned, from many different currency charts, many different commodities, to the point where there is almost a global invisible hand moving us in this direction. I'm not a conspiracy theorist. I don't believe in a lot of that nonsense, but it's in the charts. And what we're going to do is we're going to go break down through all the different charts, and I'll show you what supports this thesis. To get started, and before we can get into the specifics, I think it's important to take a look at the entire global, monetary financial system and see where we're at. And I think the best way to do that, let me see, how do I minimize this window? Here we go. The best way to do that is first look over foreign reserve exchange, foreign exchange reserves globally. So this right here is data compiled from the International Monetary Fund every year. This is basically from the 2008 crisis up until now. How has every single currency fluctuated as far as the total percentage of global reserves? If you look, obviously the US dollar is the lion's share at 61.69%. You have the euro at about 21, yen at 5, pound sterling, and then you get into a bunch of ones and twos. The reason this is important is, over the past decade, there's been a lot of rhetoric about, the dollar being doomed, and the dollar is becoming worthless, and so on and so forth. But I think it's important to put on some perspective, for those calling, China's going to take over the world. Well, let's take a quick gander right here. China's only at 1.89% of actual global liquid reserves. For people that don't understand, China is actually a closed currency. It's not an open currency. It's not an open economy. It's ultimately still communist, although it has undertones of capitalism. But before we get into the weeds, here's actually a graphical breakdown of the actual chart. You can kind of see how it developed over the years. Obviously, it used to be the Deutschmark, and then the French franc, and then there were a couple in the other category that all merged into what is now the euro. And if we look at the dollar from 1995 until now, it's always been between about 59 to 65%, which is where it's at today. Well, why is this important? Why are we talking about this? Well, I think in order to get a clear frame of reference, I think it helps to use an actual analogy. I think that will kind of make sense. And once I do, it will kind of tie in back into the currencies. Here we go. I think our solar system is probably the easiest analogy to come up with. And the reason I say this is because, although it's not exactly to scale, it kind of is pretty accurate. So we have the sun, which is the US dollar index, or US dollar in general. Then you have Mercury, Venus, Earth, Mars. This is your, Swiss franc, your Australian dollar, your Canadian dollar, and so on and so forth. You have Jupiter, which is the euro, Saturn, which is obviously the yen, and then you have Great British pound, and so on and so forth. Well, why is this important? I have a question for you, Dale. I'm curious if you know the answer or not.
Okay.
Do you know how many years it takes for all the planets in our solar system to be in quote unquote perfect alignment?
I don't.
Well, it's exactly 3,053 years, if you were curious.
Oh, wow.
To put it in perspective,
Pretty rare event.
the last time it happened was 561 BC, before Christ was born. That gives you a perspective of how long ago it happened. And the next one's going to happen May 6th, 2492, which is exactly 1,000 years after Columbus sailed the ocean blue. So this is a frame of reference of how rare of an event this is. And for those that don't follow astronomy, they call perfect quote unquote alignment is less than 5 degrees. If you go less than 1 degree, it's actually 284 million years. So it gives you a perspective just how rare something like this happens, where everything happens to be in perfect alignment.
Okay.
Well,
Right.
how does this relate to? How does this, and by the way, for those that are, the gold bugs out there, where's gold? Well, gold would be the center of the Milky Way galaxy, because ultimately that's where all these rotate around. And gold is truly the only real universal peg. Its value although from a dollar standpoint fluctuates all the time, from an absolute stance, it's always been the same. So at what point does, mathematically, Dale, at what point would currencies be in perfect alignment? What mathematical round number?
$1.
Correct. 1-to-1 parity.
Yeah. Yeah.
So if we go back to 1 second. So here we go. If we go back to this chart, if you look at this chart, well, which one obviously cannot hit parity? Yen is out of the question. It's obviously way too far. Renminbi is obviously way too far, but because it's actually pegged, it kind of acts like it's at parity, even though it's technically not. But if you look at the rest of the currencies, roughly 90.42% of the world's currencies are now within shouting distance of parity.
Yeah.
Why is this important? Well, I'm going to propose an alternate theory to what a lot of people have been saying. I mean, if you've been listening to the rhetoric of the dollar over the last decade, the sky is falling, cash is trash, the dollar is doomed, China's going to take over the world. I mean, this is what we hear. So in that scenario, what would you think the dollar chart would look like, going up or down?
They try and bring the dollar up to bring the euro to parity and the pound to parity.
What I'm saying is this is basically what the actual US dollar monthly chart looks like.
Okay.
And had you been listening to the rhetoric, it would have looked like it would have been the exact opposite, right? Everyone thinks the dollar's going down. Well, we've actually been in a very strong secular bull market in the dollar for almost 11 years now. Well, technically 10 years. So I think it's important as traders for us to filter out the noise and, what's in the financial news and the rhetoric out there, because oftentimes it distracts us from what's really happening in the bigger picture.
What is most obvious is obviously wrong. Joe Granville.
Correct. And sometimes I approach trading much like, any scientific experiment. You have your hypothesis, and then you look at your data and whatnot. But ultimately, I think you need to look at the data objectively first before you come up with an opinion, because opinions in themselves can be very expensive mistakes. You don't want to base your analysis on some emotional feeling when the tape is telling you something else. And to me, I always try and look at every chart dispassionately, without any emotion, and just look at what is the chart trying to tell me, and just listen. And I think it's important for us to kind of take a big step back. Sometimes we get caught up in the the 10-minute and the hourly and the short-term charts, that we don't take a second to stop and take a look around and see, okay, where are we right now in the big picture? What's happening? So I think,
what's the longest term chart that you give credence to? Monthlies?
Yeah, a monthly candle. I don't go beyond monthly.
Okay.
Once you get into yearly candles, it's just kind of, well, first off, most data services don't even provide it that long, and the technicals just become too choppy. You can't even really gain much data from it.
Well, who's going to live long enough to see a nice formation develop on a yearly chart? So anyway. So I'm in my 60s, and I have to wait till I'm 85 for a pattern to complete.
Yeah, basically.
Right? Okay. Well, I money comes and goes. Time is gone forever.
This is very true.
I can't wait. So anyway, monthly is the answer.
Yes. And on that front, I'm a firm believer weeklies trump dailies and monthlies trump weeklies as far as accuracy and which one has more power or say. So it's always important to kind of take a look at, market makers are masters at playing games of daily candles. I mean, they're great at that, but it's harder to manipulate a weekly or a monthly candle. You just can't, because ultimately, when for instance this pattern on the screen now, I mean, it's as clear as night as day. You can't fake that. It's there. The boundaries are clear cut. It's very decisive. It's more accurate as from a technical analysis standpoint. So let's go into the next one.
You want to hear a market maker joke?
Yes, go ahead.
Okay. Well, I just blew the punchline. But anyway, this father and son are in the restaurant, and the kid has a quarter. He keeps playing with it and putting it in his mouth. And his dad said, "Please stop doing that, son. You could swallow it and choke on it." So he turns around, he's eating, and all of a sudden he notices his son is choking, and he's panicking, giving him the Heimlich maneuver. And some guy from across the restaurant comes over and kicks him as hard as he can in between his legs. You know what I mean, right? And the quarter just pops out of his mouth, and the father's saying, "Oh, doctor, thank you so much for saving my son's life." And he goes, "I'm not a doctor. I'm a market maker."
That's awesome.
They'll do anything for a quarter. So anyway,
that's actually very, very analogous to real life. That's funny.
Yeah. All right, buddy.
So if we get back to the reason why I bring this up is because I do believe that at some point in the next 6 years, and I'll give the exact dates in a second, that every 90.42% of the world's currencies are going to be at the exact same point, or we're all in perfect alignment, as we talked about earlier. More specifically, a lot of the rhetoric out there is that they're going to trash the dollar and to bring about some kind of global reserve currency, whether you call it the SDR, special drawing rights, or whatever it may be. That's been the premise, but I'm posing an alternate theory, which is, in my opinion, a more mathematical one. Why would they trash 90.42% of hard work that they've been working on for over a century in order to go backwards and then start over, when they can actually utilize the dollar with everything else pegged to it at 1-to-1 to then bring about some sort of global event? Never before in financial modern history has all the world's currencies been this close to each other and about to approach the same level. And I think it's important for us to take a pause and realize, what are their motivations? What is our ultimate goal? And it starts to become readily clear once I'm about to make my presentation that they're not going to trash the dollar to bring about the global reserve currency. They're actually going to strengthen it and make it the very foundation of the global reserve currency. So moving forward, here is the
very out of the box thinking, mystery.
It is, but as I show you
I
now,
like it. I mean, it makes sense. So, from a trading perspective, if you believe this, and to believe something, to trade off of something you think is going to happen in 6 years, it is difficult to do unless you just have a bias every time you see like the euro rally, that eventually the grand scheme of things is to take it to parity. So if you had a great bear market rally in euro, that may have you have a bias to be looking to sell rallies until this is accomplished.
And this is actually this is a 25-year chart of the euro zone. This is a monthly chart, monthly candles. But if you look clearly, the boundaries of this current bear channel are clear cut. I mean, there's been no breaks. It's no false breakouts. It's been holding true ever since 2008, actually, when it peaked. And even technically back tested if you go back to 04. But what this is showing is, if for those that can see the chart,
everyone can.
Okay, good. The gray dashed line running across the mid-center of the screen, that's actually parity. That's 1-to-1. And then if you take those two trend lines out, the blue trend lines, where those two intersect creates what I call the parity window. So that parity window if we go in, because the boundaries are so clear cut, we can actually calculate that that parity window first opened on September 1st, 2016, and it ends on March 3rd, 2025. That's exactly those dates. That is the window, and it's clear cut as day. And if we look within that formation, clearly on the monthly chart, euro is already in a bearish, is already on a bear move as we speak. The 13 crossed the 50. It failed to break out of the 50. Now it's back down. The Bollinger Center is going to cross back down, and then the bottom Bollingers are starting to curl down as well.
So didn't we almost have that accomplished back in 2017? And I think the pounds low during that, was also, or '08, almost got there. So, I mean,
Correct.
maybe it's not going to take. So what stopped them from the reset then when it was so close with both the two other major currencies, cable and euro? Why didn't they do it in 17?
Partially, I don't think they were ready. Another thing is, part of it could be they have their own hidden agenda for whatever reason. I mean, you never know what's going on through their
Okay.
head. But they may have some specific date they're trying to target. But I think the bigger issue is anytime you have a major flush the way it had, you need to have some kind of a double bottoming formation and some kind of a back test on the top end of the channel. For it to just go straight down without any sort of back test is usually, I mean, that's just usually not the way markets happen typically. So I think a
Okay.
lot of it was the trade was probably far too one-sided. I'm sure everyone and their mother was short at the time. Everyone
Yeah.
assumed it was going to go to parity. So of course they're going to rip
Under.
through.
There's
Yeah.
people looking for 90, 80 cents euros, the real euro bears.
Well, we'll get there in a second.
Okay, buddy.
But anyways, this is the parity window. So it's September 1st, 2016 to March 3rd, 2025, which means on euro dollar, that window is now officially open, and it has been for a couple of years. So then what's next? Well, the next major currency is obviously going to be Great British Pound. This is the pound 25-year chart, monthly candle. And if you look here, obviously it's also racing towards parity. Now, this one has more clear-cut horizontal defined channels, which I showed with yellow, orange, and red. But it kind of gives you an idea of where those levels are. And they're roughly at 140, roughly 142.50, 1725, and then there was another one at 195. Anyway, so this gives you an idea of where we are. And then there's now one at 120. But if you look, every time this had one of these little formations, you have a double bounce, and then you'll have a dead cat bounce off that green horizontal trend line, and then you'll have a flush. Well, this parity window, if we run the lines down, obviously there was a very rare exception in '08 where it just completely flushed the support and had a false breakout. But ultimately, the rest of the channel boundaries have held. And if you look at that channel, that parity window for the Great British Pound, believe it or not, crossed April 1st, 2019, exactly 1 month and 20 days ago. So as of 1 month and 20 days ago, that parity window officially opened for the Great British Pound as well too. And the far end of it goes out to January 1st, 2029, which we're probably not going to have to go out that far.
I have a question for you from
Sure.
a viewer. Can
Sure.
you have a global world currency with other currencies pegged without world political and fiscal union? For example, the euro is having problems with this model because they haven't had a fiscal union.
In theory, you can. Now, that becomes more of a political philosophical issue for them because they probably want a political union as well too. That becomes more of a political ambition issue.
That's like the one world government
but
idea.
in theory, the special drawing rights have been open for almost a decade now. So
Okay.
technically the SDR has been around and we are already in that state, although no one's really drawing off the special drawing rights yet. There's been a few kind of sovereign debt issues where a few countries had to tap into it, but for the most part, nobody's really, it's not really at the forefront right now.
Okay. Thank you.
But in theory, we are there already.
Okay.
And then let's say on this specific Great British Pound chart, let's say you want to take a shallower angle. Well, ironically enough, if you took what appears to be the more conservative shallow angle, which I did with the dash purple line, it actually, the window opened up even earlier. So no matter how you look at it, the window officially opened 1 month ago, and now it's ripe for some kind of a test. Doesn't mean it has to have it happen right away, but it means that it's now technically feasible. So if we go there, well, what's the final one? Well, if the euro dollar is dropping and the pound is dropping, but the pound is much higher and both need to reach 1-to-1 at the same time, what would the pound euro chart obviously look like?
Be bullish, euro pound, and we had that breakout last week
Correct.
over 86.50. I'm looking 88 first stop, 91, and then 94. I
Correct.
think is possible.
So I'm doing the pound euro, which is the inverse, and if you
Okay.
look at the inverse, the reason why it reversed sharply, if you look carefully right here, was it hit the 50-day moving average on the monthly, which is basically a brick wall. And
Yeah.
if you look at the previous cyan circle, which is a similar formation, the same exact thing happened. You had an orange support line, and every time it tested the 50 moving average minus one technical breakout, it held every single time and then eventually crashed. So the monthly chart right now is showing the same exact thing that happened from the 03 to 07 period. And this is the reason why you were talking to earlier, even before I got on, that's why it reversed so sharply, is because it hit such a major long-term trend line. And this is why I emphasize it's so important to keep these long-term moving averages and trend lines in focus, because they're so powerful when they do happen that all of a sudden the reaction off of them is a knee jerk. So this is exactly what you were just talking about earlier. This is the fundamental reason right here, and that supports your thesis.
Fundamental and technical reason. The fundamental reason being the alignment, the technical reason being your 50-month.
Correct. And
Got
it's a 50-month exponential for those that are curious.
Okay.
I only use exponentials. I don't use simples.
Why did you choose 50?
That's a long debate. I mean, it's a complicated, but basically I had a mentor when I was much younger, and he kind of taught me a lot of secrets. Actually 20 years ago to the month, believe it or not, is when I first started technical analysis.
Okay.
And he taught me 1350-200 was, from his experience of his entire career, the most accurate combination. So that's what I use. And I get into that down the road.
That's all right. I was just curious.
Yeah.
And you're blessed to have a good mentor.
Yeah.
Look at what people have to wade through on the internet now to find someone good.
Sometimes, the old world wisdom, it beats new school thinking, a lot of times.
Yeah.
But so anyway, so from this specific chart, obviously this also showed that 08 extreme break, which is obviously an anomaly, extreme, systemic shock. But once you factor that out, everything else held as far as the boundaries of the formation. So if we look at these upper and lower trend lines, well, where does this window open up? Believe it or not, this window opened up March 1st, 2019, 2 months ago. So now all three currency pairs are now officially in their parity window, and these are the bulk of the USD dollar index.
Right.
I think, not factoring in the yen, it's almost 85% roughly.
Okay.
And so when you factor this in, so now, and then because this is such a shallow upper trend line, the far end is out March 3rd, 2025, which is way out there. I mean, it doesn't have to go all that far out. But what we see here clearly is when the orange trend line broke back in 08, the reaction was swift and immediately flushed to this lower channel boundary.
And this is a much huger formation, which probably has bigger implications compared to the last one.
Correct, it does.
Okay.
And these are all. I mean, they're all 25-year charts, but because of this is actually the pound euro, which I think is the most important part, because in order for parity to happen in specific windows, pound has to accelerate to the downside faster than euro. And the reason why I don't think this is purely coincidental, I think a lot of this is by design, is I find it very coincidental that as this is all happening in the long-term charts, that Brexit all of a sudden came into the chatter. I mean, to me, I think
great point.
I think Brexit is being used as a vehicle to accelerate this movement. Because when you think about it, what best way to trash the pound versus the euro? Create a quote unquote hard Brexit or hard systemic shock, Now, geopolitically, they may want to keep the union, but central bankers, I would not be shocked if they want this chart to accelerate to the downside, because the sooner everything gets to parity, the sooner they can achieve their objective.
Got it.
So to me, Brexit ties into all of this, and I don't think it's coincidental. Whether or not, from the political standpoint, I don't want to get into that discussion because that's a long discussion. But purely from a monetary and technical analysis standpoint, everything is lining up. Fundamentals, long-term technicals, it's all playing out as exactly almost as they wanted to or intending to. So based on these, this is basically, here we go. I kind of discuss, where the actual dates are, where the window is for each of these specific pairs. And if you take like a Venn diagram, you take the overlapping region of all three, that gives you the highest degree of confidence interval or accuracy. That's where the window is going to happen. So if you take the latest of the first three and the first of the last three, you get that Venn diagram overlap. And that's April 1st, 2019 to March 3rd, 2025. Now, this is obviously a 6-year window. It's still a wide window, but it's important to note that before you can have any kind of global monetary reset, there has to be a preceding global recession or global systemic shock to then justify some kind of a change. Because if things are great, nobody's going to voluntarily change unless they have to. Whereas if you create some kind of a global systemic shock where, let's say, what if another systemic shock happens and they can't do another QE because there's just no political will, or the balance sheets can't support it? Well, then what's the next avenue? Well, obviously, instead of going to a national central bank, they go to the international central bank, which is the Bank of International Settlements in Switzerland. So ultimately, I think that's how they're going to bring about some kind of a monetary reset. Now, does that mean it's going to be Mad Max Armageddon? No, but it doesn't need to be. In order for a global monetary reset to happen, all that happens is that all the currencies have to be in alignment. And in my opinion, because the dollar is the strongest peg, or the sun in this analogy, they're going to have to push pound and euro possibly even beyond parity a little bit in order to incentivize them to then go with the stronger option. Because if it's just 1-to-1, it may not be enough. They may have to push them beyond that, and in order to convince them, hey, you need to come on board. And so I think you could actually see an overshoot of both British pound and euro to the downside below 1-to-1, ultimately sometime within the next few years, in order for them to somehow rationalize or justify, utilizing the special drawing rights.
Wow. Okay.
So again, this is kind of out there stuff. It's very esoteric, but I think it's important to understand the backdrop of where is the global monetary system, and making sure that you're going to be most likely on, risk reward on the right side of that trade, because ultimately the last thing you want is to be fighting, long-term monthly trends, as we just showed on the, the pound euro, or the euro pound, which completely shot off what appeared to be some imaginary level, when in reality it was literally in the charts, in the monthly charts. It was textbook. So it's important to, kind of zoom out, take a macro perspective, and then how does the rest of, the financial world play into this? How does China, how does Bitcoin, gold, futures of the currencies and whatnot, how does it all play in? Well, I think, a lot of people misunderstand the China story and what actually happened in China over the last 30 years. People assume that the real purpose of their expansion was, altruistic and to help the country and whatnot. But realistically, they have major geopolitical ambitions. And the purpose of their great economic expansion was actually at an attempt to become the world's global reserve currency. So what did they do? They tried to expand their monetary base exponentially as fast as they possibly could. If you look at debt mainland China, if you look at any metric you look at, they basically tried to ramp their currency, the base of their currency, as much as they possibly could. Why? Because in order to support a global economy, you have to have an extremely large currency base. It's the only way you can do it. And the only way you can print money without entering Venezuela is to back it with economic growth. Ultimately, they basically compressed 250 years worth of growth that we had and tried to do it in 30 years. And they thought that in doing so, they could expand their currency base large enough to then become the global reserve currency. Well, if we go back to this chart right here, after the trillions upon trillions of dollars that they spent, all the ghost cities, bringing 350 million people out of poverty into the middle class, after all these unbelievable technological and infrastructure revolution that they had, they're now still at 1.89%.
Great point.
If they and for those that are curious, as a part of the SDR basket, they're actually at 10.92%. Now, how do they get to 10.92%? A lot of it was probably fibbing. The other part was it includes their gold reserves. It includes a lot of other monetary assets. They basically threw the kitchen sink in order to get that 10.92% out of the SDR drawing rights basket. And a lot of that has to do with their economic prowess more so than their actual currency base.
Yeah, and what was the motivation to go with that number by international bankers?
A lot of it, I mean, they do have a very large gold reserve. That's a part of it, but that doesn't anywhere near fill that gap.
It's like a dog and pony show on an IPO. I mean, it's really not there, but there has to be a reason, at least psychologically, why
I think
they wanted to give China that latitude.
I think given they are the largest country by population, they have the second largest military. I think in order to appease them from a geopolitical war standpoint, I think they had to kind of,
or recognition that they're a rising power and Western countries are declining.
Correct. But that narrative, let's take a pill of reality, a dose of reality right here. Okay. We're at 61.69%. They're at 1.89%. So those that say the yuan is going to take over the world, people don't understand that yuan is a closed currency. You can't gain access to it. And so is their economy. Ironically enough, the biggest mistake that China made, and this is, as with all communists, their own arrogance, they assumed that they could have their cake and eat it too. They assumed that they could shut everyone else out of their economy, but then somehow grow their currency base large enough in order to then become global reserve currency. Well, obviously, the China monetary experience was a failure. Now, from an economic standpoint, they succeeded socially. They made a profound change, but they didn't get anywhere near their target. I mean, nowhere close. And it just goes to show you cannot cheat time. The old expression, cheaters never prosper. You can't cheat 250 years of organic growth like we had into a 30-year period, no matter how hard you try. Even if you're pushing double-digit GDP growth, it's just not possible. You physically cannot grow the currency base large enough. And
just like you can't push the time it takes to gain experience to be a good trader. How many years? Well, how many years did it take before you had a breakthrough in trading?
I mean, at least 4 or 5 years.
Okay, it's like a college degree.
Basically, yeah. It is a college degree. I mean, and you got to pay your tuition, and that tuition is usually 6 figures.
Yeah, an Ivy League, not community college. You did it.
If you want to be great.
Yeah. All right, good one, buddy.
But yeah. So when you look at this chart, it really puts everything into perspective. And keep in mind, 2018 was the first year they actually reported this. If you look, all these are empty before that. So this is a new. I thought for the longest time it was at around 5. They're at least probably 5 to 6%. But the fact that they're not even at 2%, it just shows you the magnitude of the problem. So people that say that the dollar is going to implode and the yuan is going to take over the world, they just don't understand the way the Chinese, both the currency and their economy is structured. Ironically enough, their biggest mistake was they should have opened up their economy and their currency much sooner, but they waited too late. And now there's no way they can play catch up in that regard. I think that's why they realize that, and that's why they've stopped trying to inject so much liquidity into their systems. They realize you just can't do it. They can't get there. So they realize, well, let's at least negotiate a good percentage with the SDR. If you get a good percentage with the special drawing rights, it gives you more of a platform on the global stage than trying to actually physically grow the yuan. And then in many ways, that is really the only major difference between a Venezuela and China, is that they both printed money exponentially. But the difference is when you back with economic growth, you can actually justify it from a currency standpoint. You're actually able to maintain the value. And unfortunately, what's going on in Venezuela is tragic, and it's a horrible, humanitarian tragedy. But it's also a monetary experiment gone wrong, and it's important that we always be reminded, the Weimar approach, it never works. You can't just print your way into success. You have to back it with something. And although people often say, and I hear this on alternate financial news media and whatnot, the dollar is doomed. It's we're a paper tiger. Ironically enough, in many ways, it is China. Ironically enough, that is the paper dragon. They are the paper dragon because they just had their roaring 20s, and they're on the cusp of their first major financial correction in their modern history. And you cannot have, just as Ludwig von Mises said, you cannot have a massive expansion through monetary growth without a subsequent correction of some kind. And the longer you push it off, the more painful it becomes. Ultimately, when you have, Adam Smith said the invisible hand guides the market, and he was right. And when you have a communist country dictating what parts of the economy should succeed and what should fail, it creates a lot of systemic imbalances within their own economy. And those are things that you can't just brush over with, printing money. A lot of them have to come to fruition.
Great perspective.
And it's not only just from a financial standpoint, you just from a societal standpoint, you have too much pollution, you have too much waste. I mean, physical waste. I mean, trash. You have, they're basically the equivalent of a bodybuilder that's injected 10 syringes of steroids on methamphetamines, and they're basically going to bench press their heart out until it explodes. I mean, that's basically the best analogy I can come up with. It's
Wow.
you're juicing yourself to the absolute limit of breaking.
Okay.
And I think they say their GDP growth is 7%. That's a complete fabrication. I think realistically, from the numbers I've seen, there's somewhere between 4.6 and 4.8%. Is for the people that really follow. Within the decade, they'll be to where we are at around 3.5%. So the massive China growth story that everyone's been touting, that's over with. I mean, the law of diminishing returns has already kicked in.
Okay.
So at that point, where does that move us forward? I think the way they're going to fill the gap, and this
your presentation is creating a downpour here in San Diego.
Oh.
Well, I haven't finished building my ark. So, go ahead, buddy.
But anyways, back to the outline here. So how does it tie into the next topic, which is Bitcoin? Well, I think the way, and they've already hinted at this, I think the way that China is going to fill that gap is the PBOC wants to develop their own nationalized cryptocurrency. And I think that's the way they're going to fill that gap largely, because ultimately, I think we're moving in a transition from private cryptocurrencies to nationalized sovereign cryptocurrencies. And I think that's kind of the topic we're going to get into next is, Bitcoin, cryptocurrencies, commodities. How does gold tie into this debate? And I think before we can kind of get into that debate, we need to establish what is a currency and what is a commodity, because I think there's a lot of misconception and a lot of misbranding, so to speak, of what's really going on in the cryptocurrency world. Technically, in my perspective, gold is not a commodity, it's a currency. It is as liquid as any currency. It meets most objectives of currency. You can put it in a digital form, but ultimately I view it as being a valid currency. And if you take off 3 decimal points, this chart doesn't really look any different than any other currency. In fact, it's been less volatile lately than a lot of currencies have on a percentage basis.
Yeah.
So when you look at it from that standpoint, it is M0. It is the monetary base of the global system, in essence. Now, Bitcoin, in my opinion, is actually a commodity. And the reason I say that is because it still doesn't meet a lot of the metrics for what a currency should be in the technical sense of the word. its value is still too volatile. It fluctuates way too much. It's still not a efficient medium of exchange. Mining it has become incredibly energy intensive. There's just a lot of structural issues that are, granted, it's in its infancy, and I'm sure it'll get there. And I'm not bearish or bullish Bitcoin. I'm not, I'm not taking either side of that debate. I'm just looking at it from an analytical standpoint. What is a commodity? What is a currency? And I think originally, when maybe people may not be aware, Bitcoin originally was called BitGold. And I think the reason they pivoted from BitGold to Bitcoin was more a marketing exercise and a rebranding than it was any fundamental change. And the reason I say that is because if you physically buy bullion, it's actually not taxed at the same rate as normal long-term capital gains. It's actually a hybrid 40/60 under the IRS tax code. So I think a lot of that was also a tax liability issue. I think they kind of tried to rebrand Bitcoin as something other than gold because they didn't want it to be tied to gold. They want it to be a currency. But the problem is,
And gold has been declining. How about that too? When it was, during that period.
Correct, it was, and this was obviously during the whole financial crisis and whatnot. But I think the bigger issue here with this is that when you look at both, first we have to look at, to get an honest perspective. I know everyone thinks Bitcoin is going to replace gold, but let's take a step back and look at the hard numbers. Right now, the only way to figure that out is to look at total market capitalization of the entire cryptocurrency world and the entire market capitalization of gold and compare the two. The entire crypto world has a total market cap today of $198 billion. 159 of that is Bitcoin. Okay. And Ethereum is 25, and the rest of them are a bunch of single digit in the millions. Or sorry, single digit billions. Gold, there's 131,700 tons on planet Earth that has been mined and is above ground. At 32,000 ounces per ton, that comes out to exactly $7.07 trillion. So on a market cap basis alone, gold is 35 times the size of the entire cryptocurrency world. And that does not include the exponential derivatives market on the COMEX that's on top of that. That's just pure physical bullion. So once you bring on, the however many millions of contracts that are exchanged every day, they trade more on a daily basis than is mined in a year. So once you factor in that multiple factor, once you get, it becomes exponential. So 7.07 trillion is M0 of gold, basically. It's the base, and then from there you have the derivatives. Okay. So you begin to understand the scale is the problem.
Huge.
Yeah, and again, I'm not knocking coin holders, or I don't want to offend anyone. I'm just giving some perspective here. You have to look at it from that standpoint, and I think actually they understand this because ultimately they realize it's not an efficient medium of exchange, and that's why they had that hard fork and they had Bitcoin Cash now, and you're having these other offshoots. And ironically enough, before we can continue this discussion, we actually have to talk about the history of gold, and the reason is it will tie back into what Bitcoin is happening today. For those that aren't aware, fractional reserve banking was not created by central bankers. It was not created by money changers. Ironically enough, the most illegitimate financial experiments usually come from the most legitimate sources. I repeat, the most illegitimate financial experiments often come from the most legitimate sources. What do I mean by that? I don't mean that in an offensive way, but it was gold bullion dealers in Great Britain in the 1100s AD that created fractional reserve banking because they would give out more deposits than was physically in their vaults. And they knew this, but no one else knew it. Inadvertently, they had created what is now known as fiat or fractional reserve banking. And that was gold bullion dealers. They were the ones that created it.
Interesting.
So I know gold bugs today love to hate on, central banks and fiat currency and whatnot, but ultimately they shot themselves in the foot because it was the gold bullion market that created what is now the exact opposite of the bullion market, which is paper currency. Well, how does that relate to Bitcoin? Well, in many ways, it's perfectly analogous to Bitcoin today. You know, Bitcoin, had it just been Bitcoin and nothing else, that 198 billion market cap would have all flooded into one specific crypto commodity, which is what I'm going to call them. The problem is, first you had the hard fork, and then you have Ethereum, then you have Litecoin, and all of a sudden now you have over 1,000 offshoots, all of them ICOs, none of them regulated. Today's cryptocurrency market, for those that are old enough to remember, is very reminiscent of the OTC BB pink sheets market of the late 1990s.
I bring that up all the time, and they're promoted all the same way.
I mean, the same charlatans, the same promoters, like
they pay people to come in and do volume.
Pump and dump. Yeah, pump and dump. I mean, this is the oldest trick in the book. I mean, I've been on the sucker side of that trade for the first few years when I was trading. Trust me, I was involved in the pink sheet world. Little did I realize how foolish of a of an experience that was. But
that's why they put it on the bulletin board. Don't buy them on the bulletin.
and the scary thing is the pink sheet OTCB pink sheets of the 1990s and early 2000s, those were SEC regulated and they were still toxic junk. That's terrifying when you think about it, because none of these ICOs are regulated, none of them are verified.
Blinder and Robin, remember?
Yeah,
Colorado.
I remember. I mean,
all right, go ahead. It was Blinder and Robinson. Yeah,
classic pump and dump schemes. I mean, just textbook. And for those that weren't old enough to trade that, they don't remember that time. But I mean, I'm getting I get deja vu all the time looking at it now. Like, oh my God, I remember. Then you start thinking of all the ticker symbols that you got screwed on.
It's like a flashback on a bad acid trip.
Oh God, it's horrible.
Go ahead, buddy.
But you get my point, and to ironically enough, in a lot of ways they shot themselves in the foot, because as a global community, cryptocurrency world or crypto commodity world, chosen just one asset and put everything into it, it would have been better. But just like any, the tulips or, fractions, or maybe any time you have an innovative new idea, what happens? Supply comes on like a flood, like a tsunami. And once that supply comes on, it completely changes the marketplace and prices collapse. Now, I know obviously in the last week, we've had a big ramp up, and, there could be more pops and drops, but ultimately, when you're splitting that pie 1,000 ways under all these different currencies, it actually hurts the entire cryptocurrency world. If there were more of a unified, central body, then that could have probably been avoided. But, in order for cryptocurrencies to move forward, ironically enough, they should want to be regulated, because it is the lack of regulation that's causing a lot of these problems. And I think that's something that doesn't get talked about a lot. If you want to make it a legitimate currency, that's great. There's nothing against that. But, you need to have a lot of the framework in place that a lot of other legitimate currencies have. So once we get onto that, I think kind of the next, where do I see cryptos moving forward? I think this is kind of the more important topic. Obviously, we know where we're at now, but I think there are going to be some challenges in the cryptocurrency world moving forward, more so because I think federal governments and sovereign nations, this is too tempting of a fruit for them not to pick. And at some point, they're going to want to come into the fray, because that temptation is simply too great for them to avoid.
Because it's complete control, no cash.
Not only is it complete cash, but
it's control. So they know every purchase and sale that's made, rather than there being. It makes it tougher to have an underground economy.
Here's the irony. The irony of the cryptocurrency world is they think that it's completely hidden private transactions that no one knows about, that's completely protected and they're secure and it's outside of government control.
Anonymous, yeah.
In reality, it's actually the exact opposite. And
like you.
Yeah, exactly.
You're not a mystery. You're on Face now. You're not a mystery.
That's right. Ironic that I'm on Face and I have a mysterious face.
I didn't even think of that one. Buddy. All right.
Good.
All right. Yeah.
But when irony is funny. But I think at some point over the next, let's say 5 years, whatever it may be, they're going to have some type of a forced transition, a metaphorical confiscation, some kind of forced taxation. What I mean is not in the literal sense. You can't physically confiscate a coin because you have the cert or whatever. But I think for those of us that remember this, what is it, about 7, 8 years ago, for those that have foreign bank accounts, in 2011, the United States Congress passed FATCA, which is the Foreign Account Transaction Act. Basically, it forced all central banks, all banks all over the world, to report all accounts to the IRS. And at that time, this is during the whole Swiss banking secrecy scandal that came out between UBS and all the other Credit Suisse and whatnot. And at the time, there were tens of thousands of secret accounts in Switzerland. Well, did the U.S. government go and confiscate those accounts? No. What do they do? Well, you might know this, Dale. How did during the Prohibition, how did all the mobsters and gangsters actually get caught by the federal government?
Tax evasion.
Exactly. It was never law enforcement. There was no shootouts. It was the IRS. The government came in, pointed a gun at him. In that case, they arrested him. But basically, they came down on him. Well, in the 2011 FATCA case, what happened was they basically pointed a gun at every financial bank in the world. It says if you don't comply, you're locked out of the SWIFT system or the U.S. banking system. So obviously, they complied. What did they do? They reported it. They gave everyone an amnesty period. If you report your account before this time, there'll be no criminal penalty, no civil penalty. You just pay your taxes owed, and you're all clear in the clear. What's to say they won't do the same exact thing with the cryptocurrency world? Because right now, staggering majority of crypto traders have not reported any taxes on their gains, if not almost all. And the way the IRS works is they don't come at you the second you don't pay your taxes and come to your door with handcuffs. No, they give you 3, 4, 5 years of rope. They just give you more and more rope until you build the most elaborate noose to the point where you screw yourself over. There's nothing stopping them from doing the same thing they did in the FATCA case with the cryptocurrency world. What is to stop them from coming in and basically saying, look, if you don't report your taxes, if you don't do this, not only will there be a civil penalty, there could be a criminal one. It's tax evasion. What's going to happen in that scenario? Well, a lot of people are going to have a huge tax bill that they weren't anticipating, which means how are they going to pay for it? They're going to sell a lot of their cryptocurrencies. So in many ways, it's going to put downward pressure on the crypto market because all of a sudden, they're basically coming after crypto, not to mention the SEC could start heavily regulating a lot of these ICOs, which they probably will here pretty soon. So once you start to look at that legal, sovereign backdrop, you begin to understand, well, what is going to fill the void? In my opinion, I genuinely do believe FedCoin is coming. Right now, there've been hints about it. They've been kind of murmuring about it. There's no proof that it's actually coming out yet, but at some point, I have a feeling they're going to come out with their own, Federal Reserve version of cryptocurrency because the temptation for them not to do so is simply going to be too great. And if China, the PBOC, starts their own cryptocurrency, obviously there's going to be a political onus to get on that train as well too, because they don't want to be left behind in that sense. So to me, at some point, again, this is all theoretical right now. There's no basis in fact at the moment, but just where I see the markets going, I don't see why not the Federal Reserve or the federal government can create their own alternate, which will then become the official cryptocurrency, and then a lot of the others will go by the wayside. So to me, that's kind of where I see the crypto world going. I don't know if you want to chime in on what your perspective is on crypto.
It was very edifying to hear that. So I learned, and it's interesting. I always believed that maybe at first, just like Modi did, outlawing higher denominated paper, that might be a first step here in the U.S. too. Turn in all your hundreds.
I think obviously they want a digital world, and I'm actually glad you brought that up because we didn't talk about the other side of it. Is that everyone thinks that their account or their supposed cryptocurrencies and their coins are all completely anonymous and private. When in reality, the federal government has already openly admitted that they've already decrypted and roughly 85% of all crypto accounts, they've attached them to actual users. So 85% of all crypto traders, the government already knows what you're trading. And the way they got this is the SEC went after the exchanges. They went after the actual exchanges because they knew they could get, at some point there is a paper trail between you and your account and the coinage. And the irony is,
you're performing also, besides a very intuitive, insightful presentation here, Mystery, really a public service
correct.
for people that might get in trouble thinking they're getting off free, and they found a way to avoid, you don't have to use the word evade, taxes, and do the right thing today, and tomorrow takes care of itself.
Yeah, and as I was saying, like when you have a situation where the government, like I said, they're not going to come after you right away. If you can report now, I highly recommend doing it, because at some point they are going to come after people that haven't. And at that point, if they do come after you, it's way too late, because you're 3, 4, 5 years back. At that point, it becomes evasion. It's no longer a civil, oh, hey, pay this plus a percentage, interest on top of it, when you delay your taxes, but they're actually just going to come after you legally. And I would hate to see a lot of people think that they somehow circumvented the system, when ironically enough, cryptocurrencies is the greatest panacea law enforcement has ever seen. It is the greatest thing that ever happened to law enforcement, because the second they attach your name, your social security number to an actual crypto account or crypto coins, there's now an official legal public record been verified by millions of machines during the mining process that this is in fact true, which basically means in the court of law, it is as binding as granite. You literally cannot argue that one away, because ironically enough, it is the Bitcoin ledger that's going to hang you, because you literally cannot, in order, the way that, for those that aren't aware how mining works, every machine has to verify every other transaction that has ever happened before, meaning millions of mining machines have verified your transactions, and when you bought, when you sold, what that taxable event was, and that's recorded throughout the entire history of time, meaning they don't have to go back and get records from financial institutions and whatnot. They basically, it's public record. They can literally come after you with the Bitcoin ledger itself, and that's all the incriminating evidence they need. Wow. It's terrifying when you think about it, because that has a lot of implications, from I don't want to use the word because it's kind of tinfoil hattish, but from a tyrannical standpoint, that basically gives the government full control and full access to everything. That's the more kind of a scary route road that I don't want to go down, but you need to think,
I mean, you got it out there. All right.
Yeah.
Don't think that you're clever.
Yeah, exactly. Like they
because there are even coins that that's their selling angle, is their anonymity. I forgot the name of it.
That's a load of first off, by law, all the exchanges now are already having to report to SEC. So if it's a legitimate exchange, the exchange itself will, or the account holder, or whatever you want to call it, wherever your account is, that's how they have 85%. Within the next 2 years, I would be shocked if they're not at 99 percentile. They're going to get everyone's name, and they're going to know who's trading what and when they're trading it. So the whole, ironically enough, what was originally sold, again, back to my quote, the most illegitimate financial experiments come from the most legitimate sources, meaning
that's really interesting statement.
The intention of Bitcoin was to be a private world outside of government control, outside of anyone's access.
Help people that don't have bank accounts get banked.
And ironically enough, it actually ended up inverting and turning into the exact opposite. It became the ultimate system of control from central banking, from governments. This is why they don't hate the idea of cryptocurrency. They just want it to be their own. They want to be the ones in control of their own currency. And that's the irony. Ironically enough, basically those original 8 that coded the original Bitcoin code, they basically handed the ultimate tool to central governments on a silver platter and said, "Here it is." And
Scott's saying they can't game the system either. With some link, Masari IO asset FedCoin, something like that.
it's not about the set number of coins will be set. That's not the issue here. I agree. There's a finite quantity, whether it be 21 million or 84 million coins or whatever that set number is as a part of the code. That's not how they're going to cheat the system. The system how they're going to cheat is by it being their own system, they're going to support it and ensure that it goes up, over time exponentially. That's their goal.
Can I just get one thing that just going back to 11 with the gold debate? If we're looking at the reset window that you're talking about and the dollar getting stronger, could I assume that during that process, gold could continue lower and trade under $1,000 an ounce?
So, this is actually, I'm actually glad you brought this up. So Henrik and I actually have this discussion quite a bit. We talk privately a lot, and, he's an Elliott Wave guy. I'm not. We have very different methodologies, but the reason I respect him so much is he's very sharp. He's very analytical, and I'm a firm believer, kind of like Napoleon Hill said in his book, your mastermind group. He's in my mastermind group, and you always want to have someone in your trading mastermind group that has a completely different methodology, because if you have two completely opposed methodologies coming to the same exact conclusion, then you're probably on the right track.
That's what we have here at ForexAnalytix. We have guys that do harmonics, guys that do Elliott.
Exactly.
Really.
And no system is illegitimate. No is more legitimate. They're all just different methodologies, and whatever you feel most comfortable with, that's what you should go with. As long as it produces accurate results, that's all that matters.
Yeah, Schwager said, find a trading style that suits your personality.
Absolutely. And there's nothing wrong with that. But we've crunched the numbers back and forth, and based on where we both see the DXY going, our targets were shockingly very close. His was 890, mine is about 935 dollars per ounce.
980 was a high in 1980, January 1980. That was the end of that bull market.
Correct.
When Russia invaded Afghanistan.
Correct. And
anyway,
but that puts, based on originally when I made the calculation, that was at a 107 DXY. Heinrich says 109. So that's where the discrepancy is. If based on what I'm going to show you now, it's possible we could actually get a little bit higher than 107. So it may be kind of in that ballpark. That will be a generational low, and that will be an amazing buying opportunity, assuming we get there, which I think we will.
Okay.
But based on all the charts that I've shown you between, this one, the euro, showing the parity window, this is the Great British Pound US dollar, and then now, the Great British Pound Euro. In order for all those to come true, which it looks like they will, by definition, the dollar has to appreciate. And so all the currencies are also supporting this thesis that, commodities, the bear market for commodities is probably not over yet. Now, we're in a bit of a lull right now, but ultimately, I think in order to I wanted to show one final chart, and this is actually my favorite chart out of all my charts. This is actually the current US dollar index, the same 10-year chart, but instead of a monthly candle, it's a weekly candle. It gives you a little bit more accuracy with regards to the MACD and the stochastics. That's why I use the weekly on this one. But if you look at it, this is the all-time high of gold right here. Is roughly in the middle of 2011. This is the most recent gold high. I mean, it's night as day. It's inverse of what it should be. And more importantly, when you take a look at the stochastics, the MACD, every major dollar boom that has happened over the past decade has had a very clear-cut, distinct pattern. It has an initial spike, a hiccup, and then it ramps up, and it has some kind of single or double top. You can see the pattern over and over again: hiccup, pop, drop. Here again, here, and it happens every single time. And these are my custom MACD indicators. These are all been refined over many, many years. Now, every single time.
Are we going to have an analogous event in this blue circle that we had from 11 to 13, or are we going to have one of the classic indicators, I would guess you're thinking we're going to get what's in the green circle coming now instead of what's in the blue circle now.
Well, actually,
All the greens.
I think before we look at the actual specific chart, let's look at the stochastics as well. Because if you look at the stochastics, it has usually a typical, the greens are accompanied with a double top as such. And if you look here, here's another one, double top and then drop. It's same cyclical pattern that it always has.
Mm-hmm.
Now, the only time in the past decade where it has not done that is this pattern right here from 2012
Right.
to 2014.
Yeah.
Now, if you look clearly, it's essentially an ascending triangle, slightly skewed on top, but essentially it's ascending triangle. Had initial touch of the purple line, dropped back once, touched again, and then dropped through. Then it back tested, pulled back a little bit, and then immediately ripped up. If you look, the stochastics are making the same exact pattern as it did in 2012. It's actually a little bit more aggressive, but nonetheless, the pattern is the same.
So can I assume by your green circle, you're looking for some type of pullback to 93 before the bull market resumes?
Correct. And if we look at the MACD here, you had a double peak here with a lull in between, one last peak, and then you had a consolidation. We already had the double peak here. We're now in the bit of a lull. Whether or not how sharp this next spike has to be, it doesn't have to be very big, but ultimately, when I look at this chart, to me, this views as a consolidation period. And from peak to trough in this period, it actually took a full 2 years. From July of 2012 to July 2014, peak to trough is when it happened. Now, from green circle to green circle in this one, it's actually 3 years. But if you look at this cycle, it's actually truncated. It's a faster cycle this time. So we recently peaked here. We actually attempted to break through the magenta 4 times now. It's failed 4 times.
Yeah.
Now, remember, the first 3, I think let's take a step back and look at where we are in the Fed cycle. The first 3 attempts to break through the magenta center line, which has been a very solid boundary over the past decade, we were in full hike mode. I mean, full hawkish, full hike, 3-4 more hikes coming down the pipeline, dollars ripping. And even with that extremely bullish tailwind, it had trouble breaking through that magenta barrier.
Right.
All of a sudden, this past month, Fed pivot. It pivoted. It went from full hawkish to no hike to maybe a cut to maybe one more hike later this year, which was probably just saving face. To me, it's now in fundamentals. It's an even harder backdrop to break through this because you don't have that endless hike cycle coming down the pipeline. So to me, I think right now we have had a recent pop in the dollar, and I know the daily and monthly charts look bullish, but it's important to take a look at the bigger picture. I have a feeling DXY is lagging the actual market conditions right now, and I think at some point it's going to play catch up. When it does, that's when I think we're going to have some sort of consolidation. And if you look at the same exact cyan period, where was the 200-day moving average? Well, it was, roughly right around here. And it ended up. Look at where we are now. It's the same exact thing. The 200 is
94.
Right parallel. Yeah. So it's 94.05 now.
Yeah.
It could drop a tad below that, which is, I think, put it at around roughly a 93. And based on this indication, it's saying, I think this cycle will actually be 18 months peak to trough instead of 24, which would put us at around April of 2020 is when it would get into this green circle. March, April. And so, and from that point on, then we can establish some kind of a huge ramp, and then that's when we'll get some kind of an exponential pull. Now, what would justify this if there's no hike cycle? To me, I think this next cycle, this next spike is coming from some kind of Eurozone crisis. I think that
Deutsche Bank.
Some kind of, it's not going to happen right away, but there's going to be some sort of systemic crisis that's going to force the dollar to ramp up, because the Eurozone is 57%, 57.6% of the US dollar index. That means it is the lion's share of the USD. So the only way you're going to get some kind of a major ramp is somehow the euro gets hammered. Based on our previous charts, which we posted right here, that also goes in line with the thesis that somehow we need to have some kind of a correction at or even below parity. Now, does it have to happen right away? No, we could have a situation where the euro bounces to the red, has one more rising channel similar to here. So you had a double bottom,
Yeah.
rising channel, and then fell through. So we could actually fill out a lot more of this channel if we have to, which is basically a descending triangle.
There's a gap at 105.80 from the Macron election that looked
Correct.
interesting to me.
Correct. And so I think right now, this hard support, this red line right here, is at roughly around 104, a 104 handle.
Okay.
So right around 104, 105. So we're kind
What
of
a great interview. And you know what? You have a record for a great interview.
Thank you.
And longest.
I apologize. I know I'm taking a long time.
No. I'm just saying it's a new record. You can apologize to our editor who has to render this on YouTube. It's going to take Bellu a little bit extra time, but he said, it's like the team spirit we have. Dale, that's okay. Don't worry about it because it could be great information that people need to get. Is that a good attitude? Yeah.
I appreciate it. Yeah. Thank you so much.
All right. And it is.
Yeah, and I think this is, again, I'm just trying to point out, this is the only currency chart I have left is the last chart. But okay. I just want to say where we're at, in the entire cycle. And now, if we cannot break through that magenta center line, which is around 98.5 roughly, it's in the mid 98s. If we cannot break that this month's candle and next month's candle, odds are that should confirm we're in a cyan confirmation consolidation cycle.
Okay.
And in that scenario, the best advice I can give to currency traders is it's going to be a very choppy market. So when you have your trades, when you have your rips, take them, lock in profit, move on to the next trade. Don't hold for the big moves. If you're trying to establish long-term swing trades, now during this period may not be the time to do so. You got to, when you have your plays and they run, just take them and move on to the next one. Don't be greedy.
Right.
Is the best message I can give if we are officially in a cyan consolidation cycle, which may confirm here soon. And then ultimately back to the final topics. I know this is an important topic to you. Just my overall perspective on technical analysis, faith, how all this ties into, where each of us is obviously different. I don't want to get into the topic of religion specifically, but, I'm a firm believer as, I have faith in God. And I think, in many ways, faith can be a powerful force in trading. I think obviously you went through a very troubling experience, and as the old expression goes, what doesn't kill you only makes you stronger. And I'm sure you can relate to that, Dale.
Yeah, buddy.
And it's what you do is amazing, and we all appreciate. It takes a lot of hard work for you to do what you do with your broadcast. But I think more from a mathematical standpoint, my perspective on faith is that God is omniscient. He knows everything, and the reason I believe He knows everything is because I believe the future is already written. God has a destiny or plan for all of us. We don't know what it is, but I'm a firm believer that the future is written, and He's the one who's written it. Now, outside of a religious debate, how does that apply? Well, technically, if you want to get philosophical, if God has written the future, then that means every single market turn that's going to happen already exists.
Okay.
So if technically the future is written and every market future turn has already exists, technically there should be hints of it somewhere in the tape. You got to figure out how to read it. There's hidden signs everywhere. Most of the time we dismiss them as just coincidence or random hearsay or whatever. But I believe there is a grander design to the universe. There's, as a trader, you can.
He was a mathematician.
Right. You can't. Obviously, it's impossible to predict the future 100% of the time. It's just not possible. But there are signs and there are hints everywhere. If you pay close enough attention to the data and the numbers, there are ways to use technical analysis to your advantage. And I believe, this is, I'm just going to kind of end on that note that if you believe that you can do it and you believe in technical analysis and you believe that, you can have a successful career as a trader, you will, if you were willing to put in the time and the effort and work hard and have great information like you guys provide at ForexAnalytix. If you don't believe it, then honestly, it's probably never going to happen because ultimately, by definition, faith is a self-fulfilling prophecy. You have to believe in yourself, believe in your capabilities, and know that, as Steve Jobs said, anyone who's ever done anything great in the world was no smarter than you are. You know, we can all
Wow.
do it. It's just, you just have to believe in yourself and put in the hard work and the hours. And, you know, at that, nothing can stop you. I mean, the world is your oyster. So with that said, Dale, I want to thank you, obviously. I really appreciate you bringing me on. I apologize for taking up so much of your time.
I tell you what, you know, time filled with this type of from the heart and from the mind and from your mind's eye. This kind of information is priceless. So I guess I have to say that it was Providence that made you my trading your brother now, and
Absolutely.
really glad that God knew Twitter was going to exist, and we were going to meet, and we were going to do this interview, and I hope to have you back. I know you're putting together a website to help people out, and really
Yeah.
a pleasure. Really a pleasure meeting you. Really, and thank you so much for bringing you brought enough pearls into our community today for us to string a necklace.
I hope so, God willing.
Yeah,
And
you did, man.
I appreciate you mentioning my site. For those that are listening, if you want, I'm starting a charting school here soon, just to, you know, an educational program for those that want to learn how to do technical analysis or help or get, you know, academic coaching, just how to do charts properly. I'll be, you know, if you want to follow me on Twitter at Mystery Trader 99, you know, just sign on and follow me, and I'll be releasing announcements here soon. It's just to help people out. It's just kind of my way of giving back to the technical analysis community. But I wanted to thank you again for bringing me on, Dale.
All right,
Thank you so
let
much.
me just give you a couple reviews.
Sure.
Kareem said, "Great interview. Hats off to both of you gentlemen."
Thank you.
Stefan said, "Long dollar is such a crowded trade right now. Pull back before rip makes sense."
Yeah.
Rick says, "Super awesome interview and guest. Thanks." Ben Maldonado, who is someone that I interview. Great interview! Exclamation point. Scott Henderson, he's one of my Eagles. Awesome job, Alex. And BB says, amazing presentation. So the reviews are in, and it's green.
Thank you so much, Dale. I really appreciate it. And thanks again,
All right.
everyone, for being patient.
And thank you for unraveling mysteries today, Mystery.
That's my job.
All right, buddy.
Have a
All
good one,
right,
brother.
good.
Take care,
All
man.
right, good
God
hunting.
bless. God
All
bless.
right. Okay, that's it, everyone. Remember, don't just count your pips, count your blessings. And we'll see everyone for Turnaround Tuesday. Thanks for hanging out. And if you missed it, it'll be out on video after Velu gets it done. Probably take him several hours now. You're welcome, Stephen. Adios, everyone.
I appreciate it. Thank you, man.
See you, Alex. Adios.
Bye.